Today is Sunday, tomorrow is Monday, and you know what that means? Stocks start trading. We have a full in-depth analysis on this week, major events that will be happening, and how this could affect Tesla stock or really just the broader markets as a whole. And some of this information, unfortunately, you're only going to find in this video. So I highly recommend you guys watch until the very end and leave your comments, questions, thoughts, concerns down below in the comment section. So there is two things that move Tesla stock in specific. News is obviously one. Second is what happens to the broader markets. The broader market moves really can affect Tesla stock. As you guys know, if you have a bad day in the markets, odds are Tesla's having a worse day. If markets are ripping higher, odds are Tesla stock is up 4, 5, 6, 7+%. It tends to magnify any sentiment that you're seeing on any given day for Tesla stock. And this week is going to be the biggest week we have had in a very long time. But first, before we get into that, have you ever been curious what a full self-driving computer looks like? Well, it looks like this. Kind of small for what you would expect, but nonetheless, this is what powers the future of Tesla and the robotaxi. So this week is quad witching, and that's what I want to start this video off with, because this is significant. It only happens 4 times a year. It is when stock index options, stock index futures, stock options, and single stock future derivatives all expire the same day. This happens on the third Friday of March, June, September, and December of any given year. The value of quad witching days can easily exceed $5 trillion in an active market of different derivative contracts that hedge funds, institutional investors, retail investors, money managers, market makers hold in their portfolios. But September is a very specific quad witching, because what happens in October? As Carson Investment Research says, many large hedge funds and institutions end their fiscal years in October, and you tend to see some selling ahead of year end. Quad witching days in and of themselves are not bullish, nor are they bearish. The best way to look at it is it simply magnifies whatever is happening. So if people are bearish on that in particular day, week, or month, well, quad witchings can be even more bearish. And same to the bullish side as well. Historically, September is the worst month for stocks, with an average return of negative 0.5% over the past 74 years, from 1950 until today. But actually, the first half of September, really before quad witching, tends to be pretty good. You tend to see positive returns for the first half of September, but after quad witching, it looks like people start to position a little bit more on the defensive or bearish side heading into the end of the month. And that's where you tend to see really all of the decline for the month of September is following quad witching. So historically speaking, this week should be pretty good for the markets. But again, it does depend on what's happening on any given week, on any given quad witching day. This week, we are going to get a lot of economic data coming out, mainly on Wednesday, Thursday, and Friday. So Monday and Tuesday are pretty dry relative to the end of the week. So on Wednesday, you're actually going to be getting the inflation report. And I'm actually pretty bullish on this inflation report because the expectations are way too high. Inflation on a month-over-month basis is expected to have increased 0.6%. I think there's a lot greater chance that inflation comes in lower than 0.6% rather than higher than 0.6%. That is over 6% annualized inflation if you were to take the month-over-month number and times that by 12. That's egregiously high compared to what we have seen recently, with most of your month-over-month readings pinned at 0.2%, including last month's month-over-month number. Now, your core inflation rate month-over-month is expected to remain the same at 0.2%. Your inflation rate year-over-year is expected to increase on the headline from 3.2% to 3.6%, and your core inflation rate year over year is actually expected to fall quite a bit from 4.7% down to 4.3%. So my expectation for Monday and Tuesday are along the lines of the markets could be weak heading into the CPI report if people are really expecting inflation to have jumped month over month. It wouldn't surprise me to see a continued sell-off for Monday and Tuesday, and then you get the CPI report that shows inflation did not rise as much as we expected, and people are excited. Even if it is higher on a month-over-month basis, as long as it's not 0.6%, 6+% annualized, then we should theoretically rally after CPI comes out. But that might not last long, is the problem. On Thursday, we are going to get retail sales numbers month over month. Most of the time, I'm not going to say retail sales is as important as CPI. But right now, I think it is. And I'll explain why here in just a moment. But retail sales are coming out at 8:30 a.m. Eastern Standard Time the following day after CPI. You are expecting 0.2% month-over-month growth. Last month's number was 0.7%. So you're coming off of really good retail sales numbers, and you're expecting them to fall quite a bit, from 0.7 to 0.2. If for whatever reason retail sales come in negative, we have a huge problem on our hands in the markets, because retail sales fuel GDP expectations. So good retail sales equals good GDP forecast. Well, that has happened to a degree in which I have never seen before. Within the past 1 month, Wall Street's average expectation for the GDP report has went for Q3, which comes out October 26th, has went from about 0.9% all the way to 2.4%. You have seen an increase of over 1.5% as far as the expectations for Q3 GDP within the last month. And I think you're at one of those points where it's not going to get better than this. Heading into October 26th, the estimates will start to come down before they keep going higher. And I think that's really why the markets are where they are today, is because the consumer, quote unquote, has been strong and resilient. This has fueled really good GDP expectations for Q3. And when those expectations start to flip, in which they could starting on Thursday, if retail sales are negative, that could bring up the conversation of a recession again. That would not be great news for the markets. On Thursday, we are going to get PPI month over month for the month of August. That also comes out at 8:30 in the morning. You are expecting 0.4% for a month over month headline number. Last month's number was 0.3% PPI month over month. Core PPI month over month is expected to actually fall from last month's reading of 0.3% down to 0.2%. I'm a little more bearish, I guess you will call it, on PPI because of what we heard from the Fed Beige Book. That came out on Wednesday. And what the Fed Beige Book said was prices are rising to produce goods, and companies are having a hard time passing that cost on to consumers. So for anyone that does not know, PPI is Producer Price Index. This is essentially the inflation producers are feeling. Now, does that translate into CPI? Sometimes yes, sometimes no. If consumers are willing to pay more for a product, then sure, producers can pass those costs on to consumers. But if the consumer is weak and they are pushing back on higher prices, on which you are seeing today in the economy, That's not great. The Fed Beige Book said there is specific weakness in manufacturing as well as consumer goods products. So I have a hard time believing that the CPI report is going to be so high when the consumer is just not willing to buy these more expensive products. This could mean bad news for the producers. This could actually be a compression of margins. This would obviously be bad news for a stock market that is trading still close to all-time highs. Now, on Thursday, we are going to get industrial production year over year, retail sales, and the unemployment rate for the month of August for China. This comes out at 10 p.m. So this will affect futures at this time. It will affect the markets coming on Friday. Chinese data is very important because if the second largest economy in the world does continue to see these deflationary pressures and slowly slipping into a recession, that's going to be a major problem for us here in the US or really in any other country. It's not going to be a great thing for the markets. Now, potentially, we're hoping for good news. Industrial production year over year is expected at 4%. This is better than 3.7% as per last month's reading. Retail sales year over year are expected to come out at 2.8%. Last month was 2.5%. And the unemployment rate is expected to come in at 3.4%, slightly higher than last month's reading of 5.3%. So we're not expecting some terrible numbers here, and if we get good numbers, that could very much be good for our markets as well. The last round of major economic data we are going to get is on Friday, September 15th, the same day as quad witching, so really watch for those last couple of hours of the trading day on Friday. They tend to be quite bearish the last couple of hours as you really get a lot of selling out of positions, rolling over of options, and just hedging of portfolios in general. Now, at 8:30 in the morning, or 9:15 in the morning, excuse me, we're going to get industrial production month over month. You're expecting 0.1%. Last month's reading was 1%, so pretty sharp deceleration there. Industrial production year over year, you're expecting negative 0.5%. Last month's reading was negative 0.2%. A deceleration as well. Manufacturing production month over month, you're expecting 0.1%. Last month's reading was 0.5%. So another deceleration. And manufacturing production year over year, that's expected at negative 1.3%. Last month's reading was negative 0.7%. So across the board, as far as industrial production and manufacturing production, that's expected to kind of contract across the board. This could also affect your GDP estimates for Q3, so this will be very important data as well. And then finally, at 10 a.m., you're going to get the Michigan Consumer Sentiment Survey. That's expected at 69.2. This has actually risen a lot recently, and this is great news, meaning the consumer's feeling a little bit better. People in general are feeling a little bit better about the economy. But sorry to tell you, this mostly revolves around the markets and what the stock market is doing. As you can see, you hit the lows for consumer sentiment back in October and November of 2022 when the markets were crashing and the expectations for a recession were at the highest they have been at in a very long time. So the markets have rebounded. It's no surprise the consumer sentiment has also done well. Now, what is more important than the headline consumer sentiment number is the other data points we get, including Michigan inflation expectations for the 1-year period. That is expected at 3.5%, unchanged from last month. Michigan consumer expectations are expected at 66. Last month's rating was 65.5, so a little bit better there. 5-year inflation expectations are expected to remain at 3%. And Michigan current conditions, that's expected to increase again to 76. Last month's reading was 75.7. So you're not expecting great things here. You're really just expecting kind of the same old as we got last month. Now, hopefully you guys understand why this is important. Tesla is not the only stock in the markets, and Tesla specifically reacts dramatically to what the markets do. If the markets do go through a downturn this week, or even an upturn, well, that's going to be great or really bad for Tesla. It's just as simple as that. So really what I'm expecting for this week, if I were to kind of summarize everything that was talked about here in this video. Number one, Monday and Tuesday, we don't have a lot of economic data. If anything happens that is unforecasted, well, that would dominate, right? At all in this whole week. September tends to be the month in which if you're going to get a black swan, it usually happens in September. And we broke that down using ChatGPT as well. Go ahead and watch the video 2 videos ago. We broke it down. A lot of bad things happen in September. The start of the '08 Great Financial Crisis, 9/11, Evergrande, just a lot of things, okay? So who knows if something like that happens again. It's possible, but don't count on it. Monday and Tuesday could be quite negative heading into the CPI report on Tuesday, just because people are expecting inflation to have ramped up again, especially on your headline month-over-month number. That wouldn't be great news for markets if that number is actually realized. So people might be a little fearful on Monday and Tuesday. I personally think the CPI report on Wednesday is probably going to be a bullish event for the markets, especially if we sell off into it, because odds are inflation is not going to come in as high as 0.6% month over month. So you probably get some form of relief rally on Wednesday. And then it's possible coming on Thursday, if retail sales are bad, that's going to affect your GDP estimates, and that is what could really bring down the markets in a big way. I don't really care about inflation at this point. I don't think inflation is coming back. I think the economy is way too weak for that. The biggest downside I see right now in the markets is based on the GDP that comes out October 26th. And again, markets are forward-looking. So any data that we get supporting GDP is going to be weak for Q3. Well, it's going to bring up conversations about a recession again. And that's the one thing the markets are not pricing in at all anymore, is a recession. During October of 2022, that was the only thing that was priced into markets, was a recession. And look where stocks were. Today, there's no recession priced into markets. So that is what I think is going to be the thing to give us downside if we get downside. And that could happen this week. It's a possibility that you need to be fully ready for. With that being said, let's take a look at the technicals on Tesla, and they actually look pretty good. So you're bobbing in between support and resistance. Support is at 240, resistance is at the 50-day moving average at $256.33. What can you notice here? Just very kind of third grade like information. Tesla stock is getting rejected at the resistance level. It's not finding support at the support level most days. That's good, because eventually, if you keep testing this level, odds are you break out to the upside and not to the downside. If we were sitting at 240 and really struggling to go higher and sitting right on support, then odds would be you would fall under support. Pretty simple. So you're hanging out at the higher end range. This is great. And I think this week will break us out of this range. If you break above the 50-day moving average, next stop is around 265. If you get momentum above that level, then your next resistance point is around 275. And anything above 275 is where the stock could get quite explosive, just like we've seen heading into last earnings. But if this week is a negative one in which I'm leaning towards, then Tesla stock could fall to that 240 level, pretty easily break under 240 if the markets are bearish. This 240 level also coincides with the 20-day moving average. And if that happens, then your next stop is 228.27. That is your 100-day moving average. And just like we seen back here in August 18th, you gapped under this 100-day moving average, and then you instantly, the next day, gapped back above it. So I mean, the stock can be very volatile, but if you make it to that 100-day moving average and fall under that, that's where you open yourself up for more downside. But let me be very clear, Tesla does not fall independently to the markets. If Tesla stock is falling without any news, it's because the markets are also falling. So I wouldn't be willing to bet against Tesla here or even hedge a position or two unless I thought the markets were also going to fall, in which I expect the markets to fall, so it might be a good time to have some hedges on your position. I do, on the other hand, think there is more good than bad going on with Tesla as far as specific news and catalyst, like the refreshed Model 3. Some of the Google search trend data that we have been looking at is at record levels. It's never been this good. So I don't think we're going to get another price cut anytime soon. I'm not expecting that form of bad news. I'm not really expecting any fundamental bad news for Tesla. In fact, I'm expecting good news, and there's positive catalysts to keep on your radar, including the delivery event for the Cybertruck, which could come out any day now. You don't want to bet against that. Let me tell you right now, if you have hedges on Tesla, unless the markets are crashing, well, when that Cybertruck delivery event gets announced, you do not want to be bearish or have hedges on Tesla. At least that's my personal opinion. The timeline of the Cybertruck delivery event is unknown. So until we get that catalyst or any other good catalyst, Tesla stock is likely to follow the markets. And unfortunately, this week and really the month of September itself does not look good. When I will turn more constructive or more positive on our markets is when GDP estimates come down for Q3. I think this will happen before your Q3 GDP report on October 26th. If it does not, if GDP expectations stay at 5.5% for the Atlanta Fed and the markets at 2.4, 2.5%, well, that could be a black swan event because I think GDP is going to come in substantially lower than that. So if your expectations today are 2.4% coming into October 26th, well, if GDP comes in a negative number or half of 1%, that could be a really bad event for the markets. Now, if GDP expectations come down to 1% and you come in at 0.5%, well, you weren't expecting 2.5%. You were only expecting 1%. So it would still be bad, but not nearly as bad or upset the markets as much as if you were expecting 2.4%. Hopefully that makes some sense. I know it gets a little bit confusing, and that's why you should follow all of these videos so you can really stay up to date with what's going on, because this is not a one-time video kind of thing. You need to be watching these expectations if you are an active participant in the markets. And until those expectations come down, well, I think they're ultimately going to, and that's where you get downside in the markets. Now, circling back to Tesla's charts, the RSI is at 50.81, which is almost exactly on neutral. A little bit higher than your neutral level. It's at 50.81. Neutral is right at 50. So you're a little bit higher than that, but you're neither bullish or bearish as far as the RSI. The MACD, on the other hand, is now bullish. You're positive on the MACD. And any other time before you have been negative on the MACD and went positive, a much larger rally has come from it. Like literally every single time in recent years. So I don't know if this time is going to be the time that's different, but according to the MACD, an even larger rally could be to come. Now, Tesla's option activity also sings a similar song. On Friday, you had almost 1,100 orders on Tesla worth $628.5 million with a positive order value of 70%. People were not running away from Tesla on Friday. They were actively buying into Tesla on Friday. And let's go ahead and take a look at September 15th. Again, that is quad witching or triple witching, whatever terminology you would like to use. And let's take a look at some of the most actively traded strikes. And they were all calls. So for this upcoming Friday, you've seen volume of 70,000 for the 255 call and you had open interest of 17,000. So anytime the volume is higher than the open interest, that tends to be a very good sign of new positions being initiated. Now at the 250 call, you've seen volume of about 39,000 with open interest of 36,000. So still higher than the open interest on the volume side. The 265 call has open interest of 36,000 and seen volume of 39,000. So again, higher than the open interest was the volume. Now the 250 put seen volume of 46,000 and has open interest of 27,000. That's really the only large strike for puts to speak of in relation to the calls. The calls are much greater than the puts. And that's pretty obvious by this bubble chart. There's not any huge outsized bets here. There is a lot of calls at the $400 strike. A lot of these were likely placed years ago. You have open interest of 66,000 at the $400 call, and at the 758 call, you have open interest of 93,000. So you do have, some far out the money option activity. I mean, that's just not going to be something that happens by this Friday, but nonetheless figured I would throw that in here. So it looks like the active options that we seen last week were very much skewed towards the call side. That does not mean Tesla stock will go higher this week, but big money, hedge funds, institutional investors, money managers, market makers, well, they're certainly saying something. That's for sure. So that is going to do it for this video. Let me know what your expectations are for the markets and Tesla stock this week. Are you bullish? Are you bearish? Let me know in the comment section. Hit the like button and subscribe to the channel to stay up to date with all of this information in hopes that it helps you become a better investor and ultimately make more money and reach your financial goals. That's what this is all about. Most importantly, enjoy the rest of your day, and I will see you in the next one.